Hi guys and welcome back. This is my portfolio on Trading212. If you're new here and haven't been following the journey, it mainly consists of dividend paying stocks. There are some growth stocks as well which have been recently added to the portfolio. The portfolio has been running, I would say, since around about April time on Trading212. So most of these stocks in here were added around about that time. So today I just want to go through all the stocks in the portfolio. There have been some major changes to the portfolio, guys, so I decided that the amount of stocks and diversity in the portfolio was probably a little too high, so we trimmed out quite a few stocks. Now, some of the stocks that were taken out of the portfolio weren't really on the basis of sometimes the overall quality. It's just that I had some others in that sector which I personally preferred, so that's why we done so with certain stocks. So you'll see that the portfolio is a little bit more consolidated maybe from the last time that you saw it. So overall there's around about 40 stocks, where we was close on 60 last time you may have seen the portfolio. So yeah, trying to keep the portfolio size down just so that it's easier to track these companies rather than trying to track 60 odd companies. So I picked my favorite companies in most sectors and slimmed it down a little bit. So what we'll go over today is also the October dividend income, so you can see what dividends we received in October and how we done, and we'll display the graph as well to see how we've been performing since the start of this portfolio. So straight away, guys, as you can see, we're up currently 10.75%, £884, which I'm quite pleased about. It's a decent amount. I mean, if I was to manage to grow 10% in this portfolio year on year, it's something that I would be happy with, not including obviously the dividend income as well. So yeah, it's a decent run that we've had so far. So we'll go through now the stocks which are remaining in the portfolio. So we have 3M here, which is up 11.15%. 3M has been a steady stock for us, a great dividend paying company, 3.67% yield, and will remain in the portfolio. Some of the American stocks, as I'm UK based, so some of the American stocks that are paying a lower yield and didn't have a high growth rate were trimmed from the portfolio, guys, just because of the dividend tax that we have to pay over here in Europe as well, which it would take a few years to pay catch up over here with that. So we're looking for a little bit of a higher yield unless there's a good growth rate with some of the companies, which you'll see. 3M is meets both criteria. We have ABBV, which is one of the newest additions to the portfolio, which is a EV charging and robotics company in Switzerland, which is up 1.64%. They pay a 3.27% yield. We have ABBV also, which is up 8.76%, which has done quite well. They're on a good run at the moment, which you can see here, coming close to $100 here with a 5.26% yield, which, yeah, ABBV is a great company. We had exposure to quite a few companies like ABBV. We've got J&J, Pfizer. We did have Merck as well, which we came out of that position because we was overexposed, I felt, in that sector, and had some other great companies which we could consolidate in. We have ABBV here, which is also a relatively new addition to the portfolio. If you watch the Electric Future video, you'll know about why this company was added. It's a lithium mining company, which I think have got a good future and pay a dividend yield. Although it's a low dividend yield, it's quite stable. We have Apple as well, which is, we're up 8.8%. Obviously Apple pay a low yield but have a decent growth rate, so they've remained. Ashtead as well, we're up 80%. Ashtead is one of the high flyers in the portfolio. They pay quite a small yield, but have a great growth rate as well, which we can see they've got a 3-year growth rate here of 13.9%. AT&T, which we're down 1.68%. We have an average cost here at AT&T at $28.8, which we can see it's actually at 28.9, but we've got a FX impact there. BAE Systems, I have put more money into BAE. They've got a 4.6% yield. I do see this space in this sector recovering and a good opportunity to buy in, so we bought more into BAE. Caterpillar up 41%. Caterpillar, strong solid dividend paying stock, 2.4% yield, not the greatest, but they have a good growth rate, so they'll most likely always remain in a portfolio. Sentiment, we're down 17%. We're down the most in this position, but as the stock market has gone on a little bit of a rally recently, at times like this you'll see gold then go the other way, and that's expected really with sentiment. We've used this opportunity with sentiment to buy in recently, to be honest. It's in my opinion, a decent opportunity just to average in and get a lower cost. They pay a 5.59% yield, so taking advantage of that whilst it's low. Cloudflare, one of our growth stocks, up 40%, so done quite well with Cloudflare. So yeah, holding on to them for the meantime. Ferrexpo up 6.4%. With Ferrexpo, pay a decent yield at 4.92%. Trying to get the decent UK stocks that pay good dividends, and I feel are undervalued at the time of purchasing them in the portfolio. There's not a great vast amount of UK dividend paying stocks to take advantage of, to be honest. GSK, we're down 1.76%. So GSK pay a great dividend of 6.84% as well. Quite a steady company. You're not going to see a major amount of growth with this company, but a good dividend payer nonetheless. Home Depot up 25%, Honeywell up 40%, Illinois Toolworks were up 30%. So you see these three companies, American dividend paying stocks, up quite a bit with them, and none of them pay a great yield. We've got a 2.17% yield of Home Depot. Honeywell pay a 1.85% yield. Illinois Toolworks pay a 2.1% yield. So they're not massive dividend paying companies, but the growth there and their dividend growth as well is decent. So over time that will grow, and our yield on cost will show that in the future. J&J were up 0.96%. Isn't bad. We all know about J&J and how strong they are as a dividend paying company, 2.68%. JP Morgan were up 11%. Over the pandemic, we invested quite a bit into JP Morgan. Obviously, banks in the financial sector were hit quite heavily. So, yeah, JP Morgan stayed in the portfolio. They pay a 3.56% yield. We did get rid of Bank of America. Once again, Bank of America, not a bad stock at all. It's just that I prefer JP Morgan over them. Legal and General were up 23%. So Legal and General have had quite a good past week or two. Trying to return back to previous highs here at £3, which is a possibility. Obviously, they were affected from the pandemic, being an insurance company. Pay a great yield, 8.8%. Has been higher a few weeks ago. So yeah, we was investing heavily into Legal and General throughout, so nice to see them up. Leggett and Platt up 30%, one of my favourite stocks in the portfolio, to be honest. American stock, pay a decent yield, 3.56%, so getting a decent enough yield from them and good capital appreciation there. Lloyds Bank, so Lloyds Bank have been down for a little while. Past few weeks have been good with Lloyds, obviously hoping on seeing a dividend come back from them soon. So yeah, nice to see. Gonna leave Lloyds alone for a little bit and wait to see if they drop again to buy in. McDonald's up 8%. McDonald's don't pay a great yield, 2.28%, but not a bad on the aspects of growth as well there. Microsoft up 13%. Not a massive yield from Microsoft, but obviously got a very good growth rate. So yeah, solid company. National Grid were up 6%. So yeah, National Grid, obviously a lot of you guys on TRADING212 may receive this as a free share. I actually like National Grid as a company. Pay a decent yield, 5.14%. So yeah, they've stayed in the portfolio. NEO, so one of our few growth companies here. Put some money into NEO. Quite a high amount, as you can see here, compared to allocation wise, compared to some of the others in the portfolio. I believe they will grow quite well, even in the short term. I think they've got some good room for growth here. Yeah, looking to see what happens in that space. So I'm quite excited with that. Pepsi up 4%. Had a decision between Pepsi and Coke, to be honest, guys, and took Pepsi. Got a good growth, dividend growth rate, a little bit better than Coca-Cola's. Slightly shorter yield, but like the companies that Pepsi owns as well over Coca-Cola. Both great stocks. So yeah, I probably may get back into Coca-Cola at another time, but decided to go with Pepsi. Pfizer, so up 1.36%. Would maybe expect to be up more after the recent news from them, but yeah, kept Pfizer in the portfolio. Solid dividend paying company, 4% yield, which is decent, and we need that kind of yield, especially having to pay the tax. Raytheon, 3.8%. We're up with Raytheon. Obviously, Raytheon have taken quite a battering. It's had quite a bit of confidence that these guys will be able to get back to their recent share price back up here. You see how much they've fallen, paying a 3% yield at the moment. If they do get back up to here, the yield isn't going to be anything like 3%. So conscious of that and trying to take advantage whilst it's down there. I think they will recover in time. Might take a while, but I think they'll get there. Realty Income up 10%. Our highest position in the portfolio allocation wise. So solid company, 4.4% yield. Thankful for their dividend every month. So Redrow we have here up 19.7%. Had to choose between Redrow and two other UK house building stocks in the portfolio, and decided to go with Redrow here. They pay a decent dividend at 4.34% here. Personally, just like the Redrow homes and more familiar with them. Still think Barrett and Taylor Wimpey will do well. Just personal preference with Redrow, and yeah, they've done well off the recent news. Rio Tinto up 29%. Great dividend paying stock here, 6% yield, which is fantastic. You can see how well they've done over the last year. Still up 15%, even though what's happened. Shell were up 6%. See, they have had a bit of a climb over the last week or so from the news, which is nice to see. 6% yield. So yeah, I think Shell will transition over quite well, to be honest, compared to some of the other oil companies over to Renewable. So yeah, Shell wasn't going to go anywhere in the portfolio, as I mentioned before. Severn Trent up 8%. Decided between Severn Trent and Pennon, to be honest. Both do similar things here in UK with waste and water, and decided to go with Severn Trent. Snap-on up 28%. Snap-on, very, very safe dividend stock. 2.75% yield isn't great, but they're growing in the right way and doing well. Starbucks up 19.9%. Starbucks, great dividend growth rate, small yield, but if you get in now and build a position over time, I believe Starbucks will do well. Switchback Energy down 1.5%. So this stock I basically invested into as Just waiting for ChargePoint to basically merge with them. I think it will do well in the future. Information with this in ChargePoint you will see on an Electric Future video, which I covered some of the EV vehicles and EV charging companies. Texas Instruments up 27%. So Texas Instruments been doing great. Once again, great dividend paying company. 2.6% yield, not fantastic, but getting some good capital appreciation with them. We have the Renewable Infrastructure Group, TRIG, which is a renewable energy company in the UK. We're down 0.94% here. This company pay quarterly, 5% yield. They have good financials here as well. I expect decent things from them in the future. Unilever up 1.83% here. Solid dividend paying company in the UK. 2.96% yield, which is decent. Verizon, we're down 0.19% with Verizon. I've been a little bit standoffish with Verizon. Pay a 4.13% yield. With A&T, been a little bit stale, to be honest. Don't think I'll get rid of Verizon anytime soon. Visa up 3%. Visa a fantastic stock and expect good things from them in the future. Pay a really low yield, but I've got a good growth rate, so yeah, we'll be holding on to Visa. And Waste Management up 15%. Don't pay a mad yield, 1.78%, but grow well and a stable company that will keep the portfolio anchored. So as you can see, guys, overall portfolio is quite green as we scroll through here. There's only a few companies that are in the red, which is nice to see on that capital appreciation front. So now we'll just head over and have a look at the dividend income for October. So we go down here. So from the second, you can see Pepsi, we received a dividend from. Coca-Cola, Merck, Ferrexpo, Illinois Toolworks, Philip Morris, Diageo, GSK, Realty Income, Leggett and Platt, Simon Property, Cisco and Comcast. And that was it for October, which amounts to around about £10-ish, which I'll show you as you can see here. So not a crazy month, October, but not every month can be high as the last. So yeah, you also see some dividend payments there, guys, from companies that are no longer in a portfolio. But the money that I received when selling those companies just went into the existing companies that we have currently. So just thought I'd give you an update direct from the mobile app. Just a little bit clearer and easy to see if you're watching it via mobile anyway, as I do a lot of the time. So please like and subscribe if you haven't subscribed yet to the channel. Really appreciate everyone that's subscribed so far. Follow me on Instagram at The Dividend Way and on Twitter. Yeah, hopefully look forward to hearing from some of you soon, and take care and stay safe.